Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Dan Edlebeck, Head of Growth for Phi Labs, the main contributor to the Archway Blockchain, a layer one based in the Cosmos ecosystem, to discuss creating longer-term utility and equitable distribution for developers on blockchain. Dan, it's great to have you with us. Welcome to Trade Talks.
Awesome. Thanks so much for having me, Jill. Yeah, this is great.
You got it. All right. There's a lot to unpack here, right? So Head of Growth for Phi Labs, main contributor, Archway Blockchain. Explain to us what all of that means. How are these all interconnected?
Yeah, no, that's a great question. So Phi Labs is a development arm and one of the bodies and contributors to the Archway blockchain. So Archway is a blockchain to be able to help lots of different applications execute and be able to deploy. And Phi Labs is one of the development companies that is helping kind of build out some of the core protocol.
What differentiates the Archway blockchain?
Yeah, so no, that's a great question. Especially, I think, if your listeners have been following up with kind of what's happening across the crypto space in the last couple of years, there's been a lot of investment in crypto, but especially since the bear market and since all the chaos with Sam Bankman-Fried and FTX, a lot of the investment has all gone towards layer one blockchains or the base layer infrastructure. And Archway is also base layer infrastructure for applications to build on. But what Archway is differentiating on is it's focused on the economic design and economic stability of the protocols and applications that are built on it, where almost all the other layer ones are competing in the same space for speed and for throughput and for exclusively on like performance. And I genuinely believe that a vector is going to get very commoditized. And so Archway is thinking about how to build a layer one that functions with traditional business models like we're used to in the real world.
What I found interesting as I'm going through the notes, it seems to be Archway is really focusing on the developers to make sure that they get rewarded and it's equitable for their time and effort as their apps are being utilized. Whereas Web 2, as we know it now, it seems to go to the intermediaries. But when you think ahead to Web 3 and the content creator economy, developers are going to get fairly reimbursed. I'm trying to think of a better word than that, but compensated for the effort that they're putting into this.
Yeah, no, absolutely. And actually in Web 2, if you're a developer and you create an application and it gains traction, you do see a significant upside. You know, if you're building Snapchat or you're building like Instagram, those founders have done very well for themselves.
Right.
And so that's the end user application level. And actually that's kind of not been the thesis within the blockchain ecosystem for quite a while. There's this idea of, not to get too technical, but the FAT protocol thesis. And this concept is that the layer one blockchain, the infrastructure layer, is where all the value accrues. And then all the great applications, whether it's, you know, a gaming app or a ride sharing app or any type of consumer application, a trading application that's built on that layer one blockchain, that is the actual application that consumers use. The idea in the FAT protocol thesis is that all the value gets accrued back to the layer one blockchain. And Archway kind of flies in the face of that and goes against that. And the idea is that there's value created on chain. There's value created with users that are using your application. And that value should be captured by the developers and the applications that are bringing the users and the activity.
So let's explain commoditization, the commoditization moment that blockchain affords. You had used a Starbucks cup of coffee as your example. Explain to the audience what commoditization is, how it relates to that example, and then what does the future look like with commoditization?
Yeah. So as I was mentioning earlier, Jill, a lot of investment in the crypto space has gone to infrastructure layers or layer one blockchains. And they're all competing on the same metrics of transactions that are being able to be held within one block or within 1 second, or how long it takes for funds to settle to finality. But actually what's happening within the blockchain space is that as the technology improves, these blockchains are able to like duplicate and scale horizontally. So you're able to get more and more bandwidth, you're able to get more and more block space. And so this idea that you're competing on the speed of throughput of one block is going to become moot, as there's going to be infinite blockchains that are able to interoperate and communicate with one another. So instead of exclusively focusing on the same data point and same focus that a lot of the other layer ones are building, Archway is thinking about what is the long-term viability. A lot of these crypto protocols have had a boom of initial traction or excitement, and they try to prove themselves with lots of user metrics, especially in like test nets, but then don't see long-term sustainability and don't see long-term retention, and their economic models are flawed. So Archway is designed so that the activity that you bring, Jill, if you were to design an application that is an online gaming application and you get millions of users, and there's people that are paying to use your game, or there's people that are using your game and it's free, but there's a lot of on-chain transactions that are happening on the blockchain, that activity on chain is now monetized. So it's bringing back traditional business models, and activity that's being brought for users is actually being captured at the application layer instead of getting it all captured at the infrastructure layer.
Got it. So Dan, if I believe that the Archway vision is correct, and I want to get on board with blockchain projects that are creating sustainable, equitable environments with that clear vision and long-term viability, how can I tell if I'm getting on board with the right project?
Yeah, so you'll be able to see right in the blockchain. That's one thing that's really incredible and transparent and beautiful about the design of the blockchain, and what I think why this technology is so promising into the future is because you'll be able to see the amount of transactions that are happening. You'll be able to see the amount of unique wallets that are interacting with your application. And with that activity, you'll be able to see the amount of rewards or revenue that is getting generated and doled back to you as the developer. And because you're going to be able to set up custom smart contract addresses, and that's what people will be interacting with on the chain. And this is all happening in the background. The end user doesn't really know this, or they don't feel that that background infrastructure that is getting functioning. They're just using their game. But you're able to monetize their activity on chain. And so it's thinking about how you can generate consistent activity and with doing so, generate consistent revenue instead of having that value go back to just the base layer, which is pretty common and kind of the premise for the Ethereum blockchain.
Right. And then Dan, to wrap up here, anything Archway specific, any late news that you want to share with the audience?
Well, yeah. So the blockchain itself, I'm really excited about, is going to be going live in a matter of weeks. So we're really pumped about that. We're heads down right now, focused, and actually there's going to be an ecosystem kickoff party for all the builders in the Archway ecosystem in Berlin in middle of July. But we have a lot up ahead for us. And so, yeah, we're kind of heads down, focused on getting all the applications ready and primed. That's one thing that Archway also does, is I think that as blockchains commoditize, what you really need are great supportive services to be able to hook in a developer and provide a seamless experience for their integration and deployment of their applications. And at Phi Labs, there's a really strong and deep tech team that's able to provide a lot of white glove services to make for a seamless onboarding experience. And I think that's going to be a big differentiator for blockchains into the future.
All right. Well, we look forward to following up on that. Dan, thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks so much.